Hey everyone, and welcome back. You know we love to tackle the topics that can make or break your business, and today we're zeroing in on something that's super important for anyone dealing with VAT in the UAE.
I'm excited to be here.
We're going deep on the date of supply rules, which might sound a little dry, but stick with us,
Oh, it's definitely more exciting than it sounds.
because knowing when you're liable for VAT can really impact your cash flow and your peace of mind.
Absolutely.
And with our expert here to guide us, I'm confident even I can wrap my head around it. So let's just get right to it. Why is the date of supply such a big deal for businesses in the UAE?
Well, it all boils down to when that VAT liability kicks in. The date of supply is like the official starting line for your VAT obligations.
Okay, I like that. It's like once you cross that starting line, there's no turning back.
You got it.
You're on the hook for the VAT. And if you get that starting line wrong,
Oh, that could lead to some costly missteps. You could end up overpaying VAT, underpaying, facing penalties, you name it.
so not a good look for any business owner.
Definitely not.
So let's demystify this date of supply. How do we actually figure out when it is? Is there a universal formula?
Well, not exactly. The UAE VAT law has specific rules, and they vary depending on whether we're talking about goods or services.
Okay, so let's tackle goods first. What are the key things businesses need to know to nail down that date of supply when they're selling tangible items?
The golden rule for goods is what's called the earliest of principle.
Earliest of what?
Earliest of a few key events, like when the goods are actually handed over to the customer, when they're made available to the customer, or when any assembly or installation is done.
Got it.
So it's all about figuring out which of these happens first.
So it's like a race to the finish line for VAT liability. Whichever event happens first triggers the VAT.
That's a great way to put it. And to complicate things a bit further, sometimes the date of import for goods coming from overseas, or the date the payment is made, or even the invoice is issued, can also be the deciding factor.
Wow, okay, so there's a lot to consider here. It's not just as simple as, handing over a product and calling it a day.
Right, it's more nuanced than that.
So to really understand this, can we walk through an example?
Yeah, absolutely.
Say we have a Tima, she's our fashion-forward shopper, and she orders a gorgeous dress online on November 1st. She makes the payment on December 1st, picks the dress up from the store on December 5th, and gets the invoice on December 9th. So, pop quiz time. What would be the day of supply for Fatima's new dress?
Okay, so let's recap those dates. We have November 1st for the order, December 1st for the payment, December 5th for pickup, and December 9th for the invoice. Remember that earliest of principle?
As the VAT starting pistol. Is it December 1st when she paid?
You nailed it. Even though Fatima didn't physically get the dress until December 5th, that payment on December 1st set the VAT clock ticking.
Wow, so even though the dress wasn't in her hands yet, that payment made it official for VAT.
That's
And this just shows how important it is to really pay attention to these dates, because a slight change in when things happen could shift that date of supply.
exactly. Every little detail counts.
Okay, this is already making me rethink how I approach my own online shopping, that's for sure. But what happens when a business gets an advance payment for goods? How do we figure out the date of supply in those situations?
Great question. Advance payments can make things a little trickier, but the UAE VAT law is pretty clear on this one too. Essentially, whenever you receive an advance payment, that triggers the VAT liability, even if you haven't actually delivered the goods yet.
So the goods could be sitting pretty in your warehouse, but that upfront payment means VAT is already in play.
Exactly. It's like a mini date of supply, all on its own.
Yeah.
And if you're dealing with things like installments or continuous supplies, each payment could actually trigger a separate VAT liability.
Whoa, so multiple VAT triggers within the same transaction.
Yeah.
That's a lot to keep track of. So just to be sure I'm getting this, does this mean something like buying a snack from a vending machine also has a date of supply?
Absolutely. Even for something as automated as a vending machine, the date of supply is usually a moment that money goes in.
Okay, so even vending machines aren't exempt. I guess that really shows how these VAT rules are meant to cover all kinds of transactions, big and small.
You got it. It's all about creating a comprehensive system.
Well, we've covered goods, advance payments, even vending machines. What other scenarios do we need to have on our radar when we're trying to solve this date of supply puzzle?
Two more key pieces to add to the mix are vouchers and what we call deemed supplies.
Okay, deemed supplies. That sounds a little intimidating.
It's not as scary as it sounds. Deemed supplies happen when, for example, you take goods out of your business for personal use or change how you're using them within the business. And vouchers, they're basically like gift cards. The date of supply depends on when the voucher is issued or when a subsequent supply related to that voucher happens.
Okay, so we're talking about those situations where things aren't as straightforward as a typical sale.
Right. But even then, there are rules in place to guide us.
Makes sense.
Yeah.
It sounds like the UAE VAT law tries to cover all the bases, even the more unusual ones.
That's the idea, to have a clear framework for everyone.
I think I'm starting to get a much better grasp on this. But before we move on to services, can we do one more real-world example just to really solidify it?
Of course.
Okay, picture this. We have Hannah, and she's on the hunt for the perfect gift. She calls a toy store to order the coolest new toy, like a super-powered robot unicorn, because who doesn't love those, right?
Oh, I'd want one.
She pays for it over the phone on November 12th. The store ships it out on the 14th, and then they issue a tax invoice on the 16th confirming the payment. Pop quiz time, part 2. What's the date of supply for that amazing robot unicorn?
Okay, let's see. We have November 12th for the payment, November 14th for shipping, and November 16th for the invoice. Remembering the earliest of rule for goods, the date of supply would be.
November 12th, the day Hannah paid for it.
Exactly. Even though the toy hadn't even left the store yet, Hannah's payment was the trigger.
Okay, now I'm seeing how knowing these rules can actually be a game changer for businesses. Not only does it help avoid potential penalties, but it can also help you plan your finances better.
Absolutely. It's all connected.
It's like having a secret weapon in the world of VAT. All right, we've covered a lot of ground with goods, but what about services? How do these date of supply principles work when we're talking about something intangible?
Good question. Services definitely have their own set of rules and considerations, but we'll dive into all of that after a quick break.
Stay tuned, everyone.
All right, so let's jump into the world of services. Now, things can get a little more abstract here when we're talking about the date of supply.
Yeah, no more physical goods to hand over, right?
Exactly. But the UAE VAT law still has a clear set of rules for us.
Okay, good. I was getting worried there for a second.
Don't worry. The earliest of principle still applies.
Okay, that's familiar.
But instead of focusing on things like when goods are delivered, we're looking at when the service is actually completed, when the tax invoice is issued, or when the payment is received.
So it's the same principle, just adapted for services.
Exactly. Makes sense, right?
It does. So let's say I'm a consultant and I finally finished this huge project for a client on, let's say, January 15th. I send the invoice on the 20th, and they pay me super efficiently on the 22nd. What's the date of supply in this case?
Okay, so we've got the service completed on January 15th, invoice sent on the 20th, and payment received on the 22nd. Remembering our earliest of rule, the VAT liability kicks in on
January 15th, right, when the project was done.
You got it. Even though the invoice and payment came later, that completion date is what matters.
So even if I procrastinate on sending that invoice, the VAT clock starts ticking as soon as the work is done.
That's right. Important to remember that.
Noted. I'll definitely be more on top of things from now on.
Yeah.
Okay, so that's straightforward enough. But what about those long-term projects, the ones that span months or even years? How do we figure out the date of supply for those ongoing contracts?
Good question. Those long-term contracts, they can be a bit more complex, but the UAE VAT law has got us covered there too. Think of it this way. Instead of one big starting pistol, we have multiple checkpoints along the way, each with its own potential VAT trigger.
I like that, multiple checkpoints. So we're not looking at one massive date of supply for the whole project, but rather breaking it down into smaller segments.
Exactly. So for contracts with these continuous or periodic supplies, each payment or installment can actually have its own separate date of supply.
And how do we determine those dates? Let me guess. The earliest of principle strikes again.
You know it. For each installment, the date of supply is generally the earliest of the invoice date, the due date for payment, the actual payment date, or 1 year from when the specific service was provided.
So it's like a series of mini VAT starting pistols going off throughout the project.
You could say that. It makes sure that VAT is accounted for as the service is provided, instead of waiting until the very end of a long contract.
Smart. Okay, all this talk about dates and deadlines is making me want to escape to something a little more fun. Can we take a quick mental vacation?
I'm all for a break. Where are we going?
Let's say we're at an amazing concert. Music's blasting, the energy is high,
Love it.
and you decide you need a snack. But you're super organized, so you pre-ordered and paid for your snacks online a few days ago.
Smart move. No waiting in line.
Exactly. So here's the question. When does the VAT liability actually kick in for that snack? Is it when you order online, when you make the payment, or when you're actually at the concert enjoying that delicious treat?
Uh-huh. You're trying to trick me with a real-life scenario.
Maybe a little.
Well, in this case, even though you're enjoying your snack at the concert, the VAT liability actually happened way back when you made that online prepayment.
So, my eagerness for a tasty treat set the VAT wheels in motion even before the concert started.
Precisely. Just like with those advance payments for goods, that prepayment triggered the VAT liability.
I'm starting to see VAT everywhere I look now.
It's all around us.
Okay, back to reality. We've covered the basics of the data supply for both goods and services. But why is all of this so important for everyone listening, especially those running their businesses or handling finances?
It's about so much more than just avoiding penalties.
Okay, I'm listening.
Getting the date of supply right is crucial for managing your cash flow properly and making sure your business is financially healthy.
So it's not just about compliance, it's about smart business management.
Exactly. Think about it. If you get the data supply wrong and account for VAT too early, you're basically tying up money that you could be using for something else in your business.
That makes sense.
And on the flip side, if you account for VAT too late, well, you risk those penalties and interest charges from the federal tax authority.
Yeah, no one wants that. So it's like walking a tightrope.
That's a great analogy. Understanding the date of supply rules helps you find that perfect balance, meeting your VAT obligations without stressing your cash flow.
I'm starting to feel a lot more empowered about this whole data supply thing. It's not just about following rules, it's about using this knowledge to make smart decisions for my business.
Absolutely. Knowledge is power, especially when it comes to VAT.
Okay, we've delved deep into the date of supply for both goods and services. Any final thoughts or words of wisdom before we wrap things up?
You know, it really boils down to the date of supply. It may seem like this small technicality, but it's actually a really powerful tool for businesses here in the UAE.
Okay, I'm intrigued.
It's about way more than just checking boxes and making sure you're following the rules.
I like where this is going.
It's about how you manage your cash flow, how you do your accounting, and ultimately how it all affects your bottom line.
So it's a bigger picture thing.
Exactly. And it all starts with just understanding the basics, that earliest of principle we talked about for goods and services.
Right.
Then those special cases like advance payments and continuous supplies. Once you have those down, you can start to see how it all plays out in your own business.
That's when the light bulb really goes off.
Exactly. You can connect the dots between the rules and your day-to-day operations and start making decisions that put you in the best possible position when it comes to VAT.
So it's like having a VAT strategy that's tailor-made for your business.
That's the idea. And of course, if you're ever unsure about anything, don't hesitate to reach out to a qualified VAT consultant.
Always good advice.
They can give you personalized guidance and help you navigate the trickier situations.
Makes sense. Well, we've covered a ton of ground today, and I feel so much more confident about this whole date of supply thing.
That's great to hear.
But what about our listeners? What's the one thing you really want them to take away from our conversation today?
I'd say don't just think about the date of supply as an afterthought. Make it a key part of how you manage VAT in your business.
Okay, so be proactive.
Exactly. Understand the rules, analyze your own transactions, and stay ahead of the game. It can make a huge difference for your business's financial health.
Great advice. I think we've accomplished our mission today. We've taken the mystery out of the date of supply, explored all the ins and outs, and hopefully given our listeners the knowledge they need to tackle their VAT obligations with confidence, maybe even a little enthusiasm.
I hope so. It's always a good feeling to break down these complex topics and help people have those aha moments.
Okay, before we sign off, just a quick reminder that our deep dive today has been for informational purposes only.
Right. This is not a substitute for professional advice.
Always a good idea to consult with a qualified VAT consultant for guidance that's specific to your business.
Couldn't agree more.
And speaking of putting this knowledge into practice, we'd love to hear from you what resonated with you most from our discussion today. Any burning questions about the date of supply? Maybe a real-life scenario you'd like us to break down? Head down to the comments section below and let us know.
We're always excited to hear from our listeners and delve deeper into those real-world applications.
Maybe we'll even feature your question in a future episode.
Yeah.
Who knows?
Okay.
So thank you all so much for joining us on this VAT adventure. We hope you found it insightful, maybe even a little fun and best. Remember, knowledge is power, and when it comes to VAT, that power is in your hands. Until next time. Stay curious, stay informed, and keep diving deep.